Hello everyone, it's me Bima Farooq. Welcome to Law of Money. Today we are going to understand what is IPO and stock market from basics to clear concepts. After this video you will understand what is stock market, what is IPO, different participants of stock market and how stock prices moves. So let's start. Video you will understand every participant of stock market. Let's start from the center, the stock market or stock exchange. In India there are mainly two stock exchanges, the NSE and the BSE. NSE means National Stock Exchange and BSE means Bombay Stock Exchange. In NSE there are more than 2,700 publicly listed companies, and in BSE there are more than 5,000 publicly listed companies. To understand what is stock market or stock exchange, you must know what is IPO. What is IPO? IPO is initial public offering. It means that a company sells its shares to the public for the first time. After the shares are sold to the public, it will be traded by people every day when the market is open. Why does a company does IPO? The companies does IPOs to raise their money for growth like business expansion, pay off their debt and whatever. A company cannot simply sell their shares to the public. It must be approved by the SEBI, the Securities and Exchange Board of India. After reviewing the transparency, profits and the documents, and only after the approval of SEBI, the companies can sell their shares to the public. The companies which have done the IPO and the stocks are traded on the market days are called the publicly listed companies. Now we understand what is publicly listed company, so let's get back to stock market. Stock market or stock exchange, NSE or BSE, is a place where the stocks of the public listed companies are traded. It is like a vegetable market, connects buyers and the farmers. Stock exchange connects the investors and the companies. Now let's talk about SEBI. What is SEBI? SEBI is a government authority. It is like a watchdog. Stock exchange consists of trade of money, so many people get greed and try for theft. But SEBI stand as a watchdog and protect investors from losing their capital from fraud things. So without SEBI, the frauds will increase in stock market. We had talked about stock market, SEBI and publicly listed companies. So let's talk about investors. There are different type of investors. Small scale individual investors like retail investors, people like you and me buy and sell shares. There are large scale investors like institutional investors, hedge funds, foreign investors. Why do investors invest? The main question. Investors invest to get more money, to get dividend and become a part owner of the company. When you invest your money in a company, you become a part owner of that company. When the money is invested on a company and the company grows, your money also grows. Other participants of stock market, brokers and deposit systems. Brokers act as a middleman. We cannot simply buy or sell shares from the stock exchange. We need a broker. Broker acts as a middleman and buy or sell shares that we wanted. Many brokers now also are allowed to create Demat account. There are many broker apps like Upstocks, Grow, Zerodha and INT Money. Deposit system. Deposit system safely stores the certificate of the shares you have digitally. You doesn't have a physical certificate of shares you have. Deposit system will give a Demat account in your name and you can store your shares you have digitally in the Demat account, just like a bank give a savings account to store your money. There are two deposit systems in India, CDSL and NSDL, Central Depository System Limited and National Securities Depository Limited. You cannot just simply open a demat account from a depository system. You must have a contact with the depository participants like banks or brokers. Brokers will open and give a demat account for you from the depository system. We had talked about every participant of the stock market. So let's talk about how stock prices increase and decrease. Stock prices increase when the demand is high and the supply is less, and the stock prices decrease when the demand is less and the supply is high. For example, if every participant is interested in buying a Tata stock but less people are interested to sell it, the demand increase, and it is completely opposite factors deciding stock price. Main drivers are market sentiments, news and events, and the company's performance. What is LTP? LTP is last traded price. It is the single most important number on your screen. It is the latest price which the buyer and the seller agreed to buy and sell. This is the end of this video. We had talked about all participants in stock market, how stock prices increase and decrease, what is LTP and factors deciding stock prices. Stay tuned for our next video on trading versus long-term investing and how can we buy and sell shares. Thank you for watching.